Hello, everyone. Mike Arnold here, co-founder, Path Trading Partners, along with Bob Iacchino, who hopefully will be on shortly. Let's try this. Oh, I can't. Okay, little iffy. Hold on. Just get through this. Like some of these things, I don't know. There we go. Fade level. Ooh, I can make me disappear. All right, just a little fine tuning there. Welcome. How is everyone doing? Welcome, George. This was the red wave. You mean this red wave of selling? Not the red wave of the Republicans. Hey, Waka. Boy, everything's glitchy today. Market red wave. Everybody's in for this red wave of the market. You know Waka will show up when the market is red. Good evening, Anissa. Let's see. Good evening, Patrick. Hey, Dr. Michael. Good afternoon, Royal Palms. Hey, AP World. Let's see. Fed's Evans, I am concerned that much higher rates will jeopardize the Fed's jobs mandate. Didn't they say like 4.5%? I'm gonna get to. I want to see what Bob says. Before we have to do that, let's do consider subscribing, ringing that bell, and hitting the like button. That's all I gotta say. I'm just gonna bring on the Bob. Bring it on the Bob. Hey, Bob.
Hey,
You with us?
yeah, I'm just still looking at some stuff here. What's
All
going
right.
on?
Well, hey, Amadeus. Well, Bob's looking at some stuff. We had wholesale inventories coming a little lower than expected, and we had Barkin speaking this afternoon. Pretty much, besides little meta in there, announcing what 11K layoffs, and that's the green. That was the green. Tesla getting kicked in the something. Oil getting sold off. There was nowhere to hide today. It was pretty brutal in there. You see the sectors just utilities outperformed, then healthcare, and then energy just was brutalized. 56 to 43% for that 50 basis point. Fear and greed back in neutral mode. We had. We had Rivian, nothing big after close. I did glance at Rivian and Beyond Meat just for the kicks. Tomorrow, by the way, before the open, we'll look at that again. But there's not much. There is not much NIO. I know some people follow that. But, let's see. We get Bob, you disappeared.
Yeah, I did it on purpose because you were breaking up and I was freezing, and I thought maybe if I logged back in, it would be
You live
better.
in Florida. How are you freezing?
Yeah, actually, I got Hurricane Nicole coming through. I mean, it's on the other side of Florida, but still affecting us with wind and rain.
Well, there we go. Oh, that's an ugly chart.
Yes,
Oh,
that is
that's ugly.
Bitcoin. What is
That
that?
is the old Bitcoin.
Yeah.
With now the crypto bros who loved it not being regulated wondering where are the regulators? Wait, it's getting trashed. Where are regulators that we don't want?
Mm-hmm.
And you have everybody chiming in now that there's crypto carnage again. Oh well, it's always after the horse has left the barn.
Right.
Always takes the horse. It's why, they generally come in and mop after the stock or whatever it is has lost like 95% of the value. We're not there yet in crypto. But I remember that then the regulators banging on stuff. Why didn't we catch this sooner when all the warning signs were there? Oh well. So, hey, vertical dimension. Bob's wearing a red shirt. Yep, he matches the market. So, what do you have to say, Bob? What we got CPI numbers tomorrow. We had a pretty decent pullback today. What else do we have? Crude continued down after hitting the double top. There's lots you could talk about. You sent me a chart to put up there. You got the floor.
Well, so first of all, Let's talk about CPI. Again, I think CPI is slowly going to lose importance simply because, unless it blows out of the water. Before you were looking at CPI mattering regardless of which way it goes. Is the Fed going to do more? Is the Fed going to do less? I think, at least from a perspective of markets, they've decided for the most part what the Fed is going to do. And that's 50 basis points in December. And then from there, I don't know, 25 basis points more right now, another 50 in February of next year is what has the lead. Well, no, it's another 25. What is it? So if we got 50 here, that would bring it to 450, and then 475 to 4. Yeah, 50 is in the lead for February as well. So, but I think CPI matters simply because people have started to assume that the Fed is going to slow down the front loading when the Fed really just said that they're open to it for the most part. We've got some Fed speakers coming out, namely John Williams was one of them, who said the Fed still needs to be vigilant. Kashkari wasn't really backing off. But the market's not taking that as seriously as it did before, because they, as well as me, feel front loading is over. But again, I bring up to people that, can you imagine a time when 50 basis points was dovish? That's kind of what we're looking at right now. Is a 50 basis point rate hike is now dovish. So that's number one. So I think CPI matters, although it's not as earth-shattering from an equity market perspective as it has been. The second thing I wanted to point out, if you can put up that chart that I sent you, Mike.
Yep.
I don't know how big you can get it on the screen.
There we go.
So what you're seeing here is forward wage expectations, nominal spending, and consumer loans, which could be anything from credit cards to car loans. And in the past, forward wage expectations kind of led that spending. So if you think about a forward wage expectations, I expect to get a raise in the future. So I'm going to go ahead and spend because I know I'll be able to cover it. And if that continues, you can look at what's happening to 12-month forward wage expectation. It's the gray line. It's kind of falling off a cliff. So while the consumer has nominal spending and loans kind of at recent highs, we go all the way back to 2002, and that would be kind of the place where it was just as high. We're going to take the pandemic out of it. Obviously, there's all kinds of messes during that. And then obviously subprime there. You can see that the loans during the Great Recession were massive. Obviously, you look to 2009, 2010. But anyway, if you look at the rest of it, you kind of block those two parts out. You see that forward wage expectations have kind of led consumer spending and consumer loans. And if that were to continue, you're talking about a slowdown in spending. So you're talking about a little bit of future relief on inflation. And that, again, is theoretically without any Fed effects to the economy. So this chart to me shows, again, the virtual certainty of a U.S. recession, right? The virtual certainty. So, from that perspective, that's why I wanted to bring this chart up, because, again, it's a very interesting thing to look at when you see, how like you could find these little things that kind of tell you what's going on in the economy. And this was one that I found today. I also want to talk about just kind of big picture. Again, you guys all know, Waka made a point of just pointing it out again, that I said the fourth quarter was going to be positive. We're still well into positive for the fourth quarter. Okay, and I don't think that this little sell-off, however much of it is related to the midterms, it looks like the Republicans are going to have control of the House. So it's a historically bad performance by Republicans. But some Republicans can take some solace, and I'm not taking a side here, but they can take some solace in the fact that they outperformed in the presidential election year in the first place. Normally, In the House, the party out of power is down by about 20, 25 seats. The Republicans were only down by 10. They actually had a pickup when Biden won, which is unusual. So in order to just take control of the House, they needed a very small number. It looks like they got by the skin of their teeth. And if that's the case, I think we have a chance of reversing some of this if Bitcoin doesn't come crashing down on the world. Now, Bitcoin and crypto in general is still a very small part of the investment landscape. Contagion is likely to be very contained to crypto, but it's going to hurt people. So this kind of a thing, again, affects recession predictions, in my view, and therefore it could affect the markets. It's going to affect consumer spending because it's a lot of retail people in these things. And you want to talk about how much pain is too much pain. I've gone on record as saying my buy and hold in Bitcoin is going to be somewhere between 9,000 and 11,000. And if we don't get there, I'll buy it again up at new highs because there'll be a reason why it's at new highs. And the reason is likely to be either regulation has come through and it wasn't that big of a deal, or Tether blew up and it wasn't that big of a deal. We still have Tether to blow up. I tweeted that today that I thought Tether was going to be the next thing to drop, the next shoe to drop. And somebody said, so you mean the U.S. Treasury system is going to collapse? I said, well, that's assuming, because now they claim to have all treasuries, Mike, virtually all treasuries. But any proof of that has come from internal audits within Tether. Still no outside audits that I'm aware of.
And they're not audits, they're attestations, really.
Right, they're attestations, right. So I'm not aware of any external audits. I assume if Tether did an internal audit, it would come out the same as the attestations. But so Tether is probably the next thing to drop. I don't know how that's going to happen, but I still need that to clear out. I know Mike does as well, before you can even take the asset class seriously as an investment. So a lot of people regretting not listening to Mike. God, when did you bring up Tether, Mike? 18 months ago? Maybe longer than that.
It's even been longer than that. I've been on the Tether bandwagon for a couple of years.
Yeah. And I mean, I sold out all my crypto in March. So, Mike convinced me on the Tether thing, as well as I thought the regulation needed to happen. As I said, they come in and clean up afterwards. So fine. Let there be a mess first, and then we'll at least know what the regulation is, and we can buy it cheaper if you still believe in it. So, again, my prediction, it's more of a guess that the fourth quarter would be positive, is still well intact. I mean, because I'm talking about the fourth quarter versus the close of the third quarter, which was 36.01 in the S&P futures. And we're sitting at 37.54 or so right now on the S&P futures. So no problem there. The last thing I want to say is the color of my shirt has nothing to do with what I think of the markets. And then I want to talk about crude oil real quick. I had a friend at TD Ameritrade, really good friend, reach out to me and ask if the EIA report was really bad. Okay, he goes, that was a really bad report, huh? Because there were bills in gasoline and there were bills in crude oil. But refinery utilization popped. So, Mike, do you know how to get the PDF up?
Of which?
If you just type in EIA inventory report into a search engine.
Hold on.
Yeah. And then you click on the first one that comes up, which is usually the status report. And then you could go to the PDF, which is the 10 a.m. PDF on the weekly status report. And that's generally what we all look at. It'll be a PDF.
Weekly petroleum status report. Come on. Where is it? With the there's a PDF from 10.
Yeah, there's a 10 a.m. PDF.
You want data overview or weekly petroleum status report highlights?
Just click on the top left one. It's weekly petroleum status report highlights.
Okay.
That gives you really everything that anybody talks about. And
Yep.
it's kind of in small print, but inputs average 16.1 million barrels. We won't worry about that.
This you
But
want?
when you look, yeah, that's the one. The top paragraph there shows you that refinery utilization jumped to 92.1. I may not have mentioned this, and I owe you guys a fundamental crude oil video. I promised I would do it, and I haven't done it yet. Generally, 95 on refinery utilization is considered maximum utilization. All the refineries are being used up. Then you scroll down to the third section. I'm sorry, the second section. No, it's the third. I'm sorry. U.S. commercial crude inventories, excluding those in the SPR, increased by 3.9 million barrels. So everybody thought, well, that's a horrible report. But then you go over to the gasoline. Total motor gasoline inventories decreased by 900,000 barrels, 0.9 million barrels, right? Which is 900,000. When you combine that with refinery utilization, that's strong demand for this time of year. So when you see this kind of refinery utilization, the next thing you want to look at is next week's motor gasoline and distillate inventories and see if they've got another draw or if they've built a dramatic amount. Because this may be the refineries trying to catch up because there was this decrease in gasoline inventories. And then if the demand drops off, you'll get a build there. You also see just below that, distillate fuel inventories decreased by 500,000 barrels, or about 17% below the 5-year average. That includes diesel. Okay, and diesel's the problem. So crude oil, I think, fell off today as much in sympathy with the rest of the asset classes. I mean, if we're getting a recession, we're going to get lower demand. But the short-term EIA was not a weak inventory report as a standalone. So anyway, that's all I want to talk about. Is there any questions for me?
Yeah, let's see. Bob, is there a relationship between unemployment rate and CPI?
Okay, so no, not a direct relationship. Okay, because CPI measures inflation. Inflation is always rising. Okay, we talked about that before. Mike put up a CPI chart that we got off Fred, and you could see that consumer price, the actual index, is always going up. Okay, always. There were two dips: the Great Recession, 2008, 2009, and the pandemic. The rest of the time, CPI was in a constant move higher. The consumer price index, it's an index. The time you see a correlation is when we enter a period of dramatic disinflation from a high level or a moment of deflation. Now, we talked about this a couple of weeks ago. Inflation is the index rising. Okay, right now what we have is high inflation. But we always have inflation. That's why the Fed says our target is 2% inflation, meaning a rise of 2% year over year, every year. They don't want it to be 8.4 or whatever tomorrow's estimate is. Anyway, disinflation is when inflation is starting to fall in terms of its increase from a higher level. So 8.4%, let's say CPI comes out at 6% tomorrow, disinflation. Deflation is negative prices. CPI comes out at minus 0.5. That's deflation. The last two, you have a correlation to unemployment. You can see unemployment rise through that. But when you have stable prices, generally employment is good. When you have mild inflation, generally employment is good. You have prices not moving much, generally employment is okay. There's no direct correlation between the unemployment rate and the CPI that I have found.
Again, Amit, Bob, in the Fed meeting last week, asked Mike, but thought I'd ask it again. There was a question asked to Powell about the Taylor rule and rates need to be higher than CPI to get inflation down.
That's not technically the Taylor rule, but it fits within the Taylor rule. Um, I honestly, I don't know, Vertical, if that's actually what has to happen. I do know that that's what the Fed is talking about when they say terminal rate. Okay, so when the Fed is talking about a terminal rate, they're talking about the rate they think pushes inflation down below that rate that they're at. Okay, So if you say that the terminal rate is 5.5%, they think 5.5% will drop inflation below 5.5%. Now, historically, the Fed funds rate has been higher than inflation. Recently, we went through a period of zero Fed funds with slightly positive inflation, okay, because they were trying to get inflation up. So it seems from that particular experience, I mean, we're 0% for what, Mike? Almost 10 years?
Long time.
Yeah. So from that particular example, it would seem that they believe that section of the Taylor rule, because in order to get inflation up, they took the Fed funds rate below the current level of inflation. But they're not going to take Fed funds to 9% with 8.4% inflation. They're not going to do that.
Sashi at Bob, one question. Did the money already move out of is that mega caps to IND utility, oil industrials and utility? How we are Dow 32,500 and SPX 3750 and NASDAQ 10,400. Where do you
Well,
think hold
go
up.
ahead.
Go. I thought that was the same question, but no. Go ahead.
Well, what I was going to say was, I mean, certainly a lot of money has shifted into value, if that's your question. When you say, has the money already come out? I honestly don't know if all the money's come out. Mike actually might have some technical metrics on that. I don't know if he does or doesn't. But certainly a lot of money has come out of tech and gone into dividend paying value, especially on that last sell off that we had. So, but I don't know if all of it's come out. I know of funds and people that are starting to nibble at tech here, but they're talking about 5-year holds. They're not talking about the short term. So it would take another wash down to get those people to come out. It would have to be a big wash down. So I still don't believe we've had a crash. I just think this is a bear market.
Where do you think we will go on the spiders if we come in line in the CPI?
I'll leave that to Mike with levels. If we come in line, we're probably going a little higher. But
Yeah,
that's a levels question to me.
What else do we have? Let's see. And we're just looking for any other questions. Well, John believes tomorrow we will be bullish because the pullback today, just like the CPI in June. Waka thinks we'll do a major sell-off tomorrow.
John, the fact that it happened in June does not mean it's going to happen the next 2 days, man.
Boy, if we do, you know what level in order for me to qualify for a capitulation sell-off tomorrow it would have to be a crash. There is literally, even if we drop to 3,600, would not be levels for a capitulation sell-off. So I don't see us getting a capitulation sell-off. Or any sell-off, we could get a sell-off, but nothing that would be a capitulation. Nothing.
Yeah, I mean, to John's comment, I believe tomorrow will be bullish because of the pullback today. If CPI is 10.6%, the pullback today isn't going to matter. I'm just saying, it's just not. Yeah, it's just, yeah. So anyway, you can't look at last month's CPI reading that's going to be different than this month. Even if it comes out the exact same, the market is positioned differently.
What are they again? You're coming on tomorrow morning, right?
I'll come on tomorrow morning after CPI. Yeah.
And what are they? I forgot what they're forecasting tomorrow. Again, 7:30, 30 minutes before the open. Oh, look, we have Waller speaking in the middle of the night, our time.
Yeah, Waller's speaking like 2 or 3 a.m. CPI expectations are for a headline year over year of 8% and a headline core of 6.5. Why don't I have month over month? Oh, here's month over month. Month over month headline 0.6, core 0.5.
So
Fun.
is another fun. Is the week over yet?
Almost. This has been nuts. I had to
Oh,
do equity commentary for the CME, and I chose the Nasdaq, and I was starting to write about Bitcoin being the people who buy Bitcoin are similar types who would buy tech. And when you're getting a move out of tech and into value, you're getting a move out of Bitcoin and into gold. It's kind of a similar relationship. But with Bitcoin crashing, gold isn't necessarily holding up either. So you're getting a move out of Bitcoin and into cash. But certainly the extra weight, to Shashi's point, the extra weight on Bitcoin certainly was an extra weight on NASDAQ because there's, again, same types of investors that would buy Bitcoin would buy tech. And the CME asked me to not talk about Bitcoin at all. And they do this on occasion because they obviously have quite a bit of compliance issues to deal with, right? And so they'll want it so that something is not discussed. And I literally said, "What do you guys have a suggestion as to what you want me to talk about then?" Because it's a big part of what's going on today. So if you watch that one, I'm telling you guys because maybe you guys will see it. You guys know me, and it was really, really like I just rambled. It's completely rambled. It was brutal.
well, yeah, because I mean that's one of the big stories of the day,
Yeah,
and I believe there's a little more ripple effect than a lot of people think.
yeah, I agree.
So, I'm
Anything
just
more?
not saying, because it's crypto. You've had more and more institutional involvement over the last, especially few months. And
It's
this,
just the small. It's likely small portfolios, so they'll be. I mean, they'll sell out of their crypto, and those are going to be big numbers. But unless you're Michael Saylor, it's a smallish part of your
you
portfolio.
also have a number of pension funds that went into stuff. There's been some pretty heavy investment with pension funds in the last year into crypto.
I mean, I'm not
So
disagreeing with you. I'm just saying, like, when you look at the overall activity in crypto, it can't be that large,
there's,
right?
this
Or
FTX
it can
thing.
be when you look at the small share of overall markets that crypto on the whole has, right?
Well, I mean, Canada pension fund, third largest, lost 23 billion in FT. I think that should have been FTX.
Yeah, they might have had an investment at
Yeah,
FTX.
they did. There's a number of big things, investments in FTX that have just in FTX been Binance or whatever it is walking away from that thing after looking at it. So FTX is going bye bye.
Yeah, I got to send you a video, Mike. It's on my Twitter. I think I retweeted it of that idiot Blankfein Fried or whatever the hell his name is talking to Congress about he can't wait to be regulated because it's so transparent. It's more transparent than the financial system was during the 2008 crisis. You know, I mean, Tom Brady was involved in FTX. We went to see a comedian named Joe Coy at the FTX arena last weekend. What's it going to be called next year? It's probably not going to be the FTX arena.
It's not going to be the FTX. See, if you ever make it huge, don't buy naming rights on a stadium or arena.
Yeah, guaranteed rate.
Yeah, Enron,
Enron,
WorldCom.
WorldCom.
Oh,
That's like the death knell when a fast rising company buys naming rights.
yeah.
That's like a sell signal.
Well, we could then is SoFi gonna go?
Yeah.
uh, I mean, this is, and now they're screaming for regulation. It's just, I give up. I just
Just,
give up.
just keep doing what you do, buddy. All right.
Uh,
What else is there for him? Coco's asking if I'm traveling. What? No, no, no. So, all right. So, full disclosure, I have a relative who's ill. He's supposed to have surgery on Wednesday, but now they're doing tests on his heart to make sure he can handle the surgery, and the tests haven't come back yet. So now it's Friday. So that's why I'm going to come on the live stream tomorrow morning and talk about CPI, and then I'll be traveling to go to where he's at in the hospital.
Oh,
So that's what it is.
Oh boy, I'm just looking if as the Fed pulls liquidity out will cause something to break. Seems like we're getting more distribution in individual stocks.
Here's something that just broke. FTX seeking emergency funding to meet withdrawal requests. Mike, can you imagine getting one of those calls? Hey, can you lend us money for withdrawal?
Yeah, no.
What?
Well, it's done.
Yeah.
It's done. It's over. So there's still going to be a ripple effect. And all this stuff, with all this leverage lending and all these levered, for the mining it for crypto mining, all this massive leverage that has been taken. That's why the ripple effect I mentioned yesterday when that wasn't even as we had a decent close yesterday, still above the June lows, but I'm like, there's never one cockroach because this is going to ripple, especially as big as FTX is. And here you go. So, and oh well. Now, isn't everything getting sort of consolidated too? Wasn't crypto supposed to be like the big thing was decentralized, and you got what? Is everybody going to go now to Binance or Binance or whatever it is? And is that going to be the one-stop shop?
One stop shop.
Yeah.
New time highs. All new time highs, one shop stop.
Yeah, one shop stop. Hey, I can put an interesting spin on language.
All right, what else for me? Anything, or I gotta go?
I don't know.
I don't see anything else. Look, if I missed anybody, email the support, send the question so it'll be in the recording, or show up tomorrow morning and I can answer it.
Yeah, Bob, do you feel like CPI is being teed up for a beat or a miss? I don't understand teed up.
I actually think it's going to miss. I think it's going to come in weaker than expected, but it's more because I think the economy's weak, not that it's being teed up by anybody. I just want to be clear on the language there, George.
It's not being teed up. It's just going to come in the way. I mean, the forecasts aren't like a sandbag in it.
Yeah.
One way or the other, they're just a forecast. Oh, this is going to get ugly. All right.
That's my think, Puddin'.
That's where. All right, I'm
keep going levels. I'm gonna jump. I'll see you guys tomorrow morning.
All right, thanks, Bob.
See you.
Hey, everybody. Oh, I'm just tired. It's been a long week already. We got still CPI tomorrow. Are we going to get to the next major levels in Bitcoin tonight? We were pausing at that 15.5 for a little bit, and now it's going down. We're not even getting pausing bars on here. Next key, 13,733. What was this? Breaking Biden on Elon Musk. I think Elon Musk cooperation and or technical relationships with other countries is worthy as being looked at. Well, it's all gonna come. It's all gonna come crashing down. Speaking of that, Tesla took it in the shorts again today, dropping through that next target 181, 180.50, 181. Next key area is 174. Was this still Elon selling? By the way, the little mini double. You never even got a 5-minute close. Somebody reached out to me. He said your double didn't work. I said it confirmed here after this. It actually changed. You had to change your targets. Then it confirmed but never triggered. Even on a friggin' 5-minute chart, it was never a trigger. That's why you gotta wait for the close. If it's not even a 5-minute close, you're being a moron. So I know the person's watching. You are being a moron. If you don't even get a 5-minute close, forget about it. Forget about it. I mean, that was some pretty decent selling there. Let's see. We got CPI tomorrow. Still the double stalled a little bit on the first target. Then we bounced back and now lower. Key areas I'm watching overnight 37.44. You have 37.28. From this standpoint, from a short standpoint, going into CPI, I would be, it's already hit the stop reduction. So it's more aggressively just tightening up the stop. Your key level at this for these technicals, the full one would be 38.23.25. When you have these kind of numbers coming out, I always like to tighten it up a bit more. So my key area would be just above this last little rotation down for a tighter stop and going into looking at unwinding more before the number print comes out. So that's about it. Overhead resistance. Overhead resistance is a little stalled out a little bit there, and then now that's overhead resistance right about 39.76 back to 38.05. Going in tomorrow. Where else do we sit? I wanted to point a couple other things out. And I don't have a lot of time to stick around today. We've been having some long live streams. But crude closing below 62.5. So I am focused on a return to the most recent lows from the middle of October. Yes, the potential breakout play that never triggered is still in place, but it looks like we could be setting up for more of a sort of a horizontal channel. So I'm really curious how it's going to act down here if we get any setups. What else do we have? Dollar index still holding now at this key area, but we don't have a super strong holding level yet. Not a super great pattern yet. This was a very sloppy double here. You can see it. It was playable with the conservative targets. This was playable right here, but it's the reason I just want to show it. It's already played out. Interesting enough, if you get a close above today's high tomorrow, so a break above today's high that carries into a close, that would be a short-term buy bounce signal. Your rotation zone is flat. So it would be more of a bounce upwards to this prior 111.83. Where else do we sit? NASDAQ. This is the one I'm keeping the closest eye on right now because we get a close below 10.7 again. That could get ugly in the NASDAQ, at least from a short-term perspective. But tomorrow the level I'm watching is 10.7 going into the morning. Especially when we broke yesterday's low. Remember, we had an inside bar this morning, and then we broke down below the lows, which was one of the key things when you get that inside bar. You see it right here. Pause. Now breaking down, pausing just in front of this 10.8, 10.814, 10.817. If that breaks, you can just, I'm just going to show you my next minor level I'll watch for overnight. It's about 10.786. Dow. Also with the double, first, second target with that 50 virtually hit. Also flipping the, why did I have those on backwards? Watching this final target, which is the 62.5. And you know the significance of that. Notes. We got that little shakeout and then back to a bounce. Double still in play. Nothing much. I'm pretty much just waiting until the CPI comes out tomorrow from a short-term perspective. Let's see, Mike, you were correct about Roblox. It bounced in morning and then rolled over and tanked. The long wait finally paid off. Glad it paid off for you. Yeah, there you go. And this is, by the way, you are into a clear path move here. So even on bounce plays, there could still be plenty more downside. And also remember, now you have the close below 62.5. So even with bounce plays, 25.68 would be the next highest target after we take out 39 or 29.71. On bounce plays, I'd just be watching for shorts longer term. Well, Bitcoin over $1 is overbought. Oh, Waka, you crack me up. So, you wanted cat. I saw somebody wanted cat. I'm not going to stay on long today. I just can't. Nothing's really changed since last time we looked at cat. Still, your key level is from the low on Monday the 7th. That would be a trailing stop level for me personally. Why? You start closing below that, you're into a gap fill area up, and it's run out of steam up against major highs. But as long as it holds up here with the rising rotation zone, that's why I need the close below that level. Qualcomm. No, I mean you got the gap fill. Longer term, yes, this is a double or a potential double. Long way off, but I'll put it out there now. Long way off. You'd need a close up here, above about 121. That's the only potential bullish. Might never ever trigger. And that level is very key resistance. So if this does take out yesterday's high, the Tuesday the 8th high, the only play I'd be watching for in the short term would be about, to the bullish side, would be 118.70 area with the declining 50. Though you start breaking below yesterday's low, which was this, it filled this little gap here, and which was Monday's close, I'd be watching for the next move, next leg down if the markets stay weak. Overall, from a bigger term perspective, the only bullish thing from a longer term would be if that double triggered. That's it. That is it. I just got to check on the weekly. And also remember, look at this. Remember, I always go through, even though we don't always do it on the channel, make sure when you're looking at a stock at this point in the markets, you do double check on the higher time frames. Because over this week's high, which was the high for Monday, which the only way would be that little breakout move. But look at this. You have the declining weekly rotation zone and the 200. So from a conservative point of view, I wouldn't want to do anything unless that double triggered from a buy side, because then you'd be back above the 200. And it is lower probability since the weekly is not out of the way. I'd be more focused on the next rollover play to the 96 area, which is a pretty key support. ARC closed from all, I thought it was below. I had ARC. I'm just going to, ARC closed below the 87.5 from all-time lows to all-time highs. Not the 62.5, Paul. This is I have the chart updated from all-time lows to all-time highs. The 62.5, it closed back in January of this year. You see, it came down towards that 75 area, bounced back to 62.5, and then now full round trip to the 87.5. The 87.5 was 32.80. Today we closed at 32.57. So this fulfilled the round trip harmonics. Yeah, just making sure we were on the same page. I do that kind of stuff all the time. So for all the naysayers out there with everything else, I don't know what to say. Kathy's still tripping. Kathy's still tripping, blaming everybody except for herself for picking overvalued crap in a rate hiking environment that was way overvalued. So maybe she should start a free YouTube channel. By the way, your next target, $30 roughly. And inflows, surprisingly enough, are still there's still money going into this piece of crap. Yeah, you'll get bounce plays. But come on, people. You can't find anything better? Wow. Let's call it there a day. Let's call it there a day. Yeah. Bitcoin's hit oversold and it can keep getting more oversold. Now we will get some kind of short-term capitulation bounce. You will